Hey there, this is David Cox, Senior Portfolio Manager at Financial Lane Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, August the 7th, 2026. I do apologize, I've been gone for a while this summer and I will be gone again, but here I am in the middle of the summer. I hope things are well. Let's get into the markets. We'll start off here with the usual. We'll sort by week here. It's definitely been an up week here for stocks, for growth, and certainly for gold and silver. I want to talk about those. And down on the bottom, you can see crude oil pulling back again. Just a reminder, lots of data on some of these slides here. Just pause your video player at any time for more details, and you can see the short, intermediate, and long-term trend. Again, I think it's always good to remind ourselves that the wall of worry, which is really what the media tries to do to us, is deceiving, and it can mislead us, right? So Canada's in a recession, and again, stocks just continue higher and just continue to ignore and have continued to ignore lots of the data. Same thing in Germany, same thing in the UK, same thing in the US, some would argue, but the bottom line is this, is that the market is more important. Market's opinion is more important than our own, certainly than the media and the narrative, because again, it comes down to demand and supply. And as of right now, there continues to be demand, and actually there is increasing demand by the looks of it for stock prices, and that is what we're going to continue to keep our eyes on. And this weekend, when you're sitting around at the beach or at the cocktail party, just remember when they tell you that, again, you trade and tariffs and wars and all these things are troubling the world. Copper is at new highs, and copper, again, used to be called PhD, Dr. Copper, PhD in copper, because copper prices essentially are very economically sensitive, and so copper prices at highs does not suggest that we have economic weakness and or calamity ahead. Gold season, this is important. I'm going to show a couple charts here, but on the left side here, so gold, this is a weekly chart, has pulled back, went up to about $5,600 US an ounce, down to about 4,000, and is turning upward. Nice kind of bullish candle there in the left circle. Just a reminder that from a seasonality standpoint, August, September, through the rest of the year tend to be the very positive months. Okay, so we've just gone through a pullback, and this has been a very strong trend. There was a lot of interest, of course, a lot of buying, and certainly some capitulatory, blow off top back in January and in March. But here we go again in August, and it looks very, very attractive. So here's another chart. On the left side, we've got the Canadian gold stocks. It look very, very similar. This is XGD on the Toronto market, but it looks very similar to GDX or something on the US side. You can see on the right side, this is the CEF. That's the Sprott Physical Gold and Silver dual listed. Both those securities reaching RSI 5 oversold on the weekly chart. Now, again, I always like to point out that oversold oscillators on a weekly chart, they tend to happen about once a year. And if you look on the left side, you can see that the green circles show that, yeah, that's about it, once a year. You can see on the right side, the silver and gold bullion ETF actually has not been oversold since 2023. So again, even we get a little bit of a bullish divergence here where we have a higher low in the oscillator. To me, it looks like very good risk reward. And certainly we are participating and have bought back into these areas. Let's look at drawdowns in July. And July was very, very significant, even though the market itself, certainly if you look at the S&P or the TSX for that matter, did not show any weakness. A lot of the strongest stocks within this market had some pretty significant pullbacks. Now, I've shown basically the peak to trough pullback here in the last couple of months for these stocks. And these are all stocks that I've talked about course of the last few months. Some of them are large cap, some of them are mid cap. But the bottom line, as you can see, I mean, couple stocks there, Rocket Labs and IONQ at the top, that's down 60%. That's the recent correction. You can see SoftBank down, losing half its value, and some of those major semiconductors like Lam Research down 43%. Even Caterpillar and Quanta Services, two stocks that, again, aren't in theory, they're not technology stocks, but again, this whole concept of how many companies and what are they doing in terms of their businesses and what is their relation to AI. Bottom line is momentum has captured a lot of interest in some of these stocks, and you can see the sell-offs have been pretty serious because 27 to 30% over the course of a month when the market barely falls, I'm telling you, is pretty painful, especially as an investor in those areas. But the bottom line is, what do we want to know? We want to know what stocks are continuing to show good strength. Where is the relative strength continuing to show from? And to be honest, it's not necessarily away from some of these guys. It's just that these stocks came under some pretty intense pressure. If we look at the Russell 1000 here, you can see consolidation over the course of the last couple months. We've just broken out in the last few days. But more importantly, if you look at the bottom panel, that even as this consolidation was happening, there really were no lows, right? So more stocks have to hit lows for the market to weaken, and that has not been happening. Stocks have continued largely to evidence more highs than lows, and that is just the bottom line. And until that behavior changes, we are going to continue to expect the markets will rise. The beta rotation model looks at the 4-week rate of change of utility stocks versus the S&P 500. You can see in the green circle in the middle panel we're down at a level here that doesn't happen all the time. I've perhaps missed a couple of green circles, but you can see, two, three times a year, essentially we've got massive underperformance of utility stocks, and so that does tend to be very bullish for the market. It means that the more defensive areas are sort of seeing capital outflow on a relative basis to the broader stock market, and that's actually a buy signal for equities. You can see the advanced decline lines on all of large, mid, and small caps all look pretty healthy. Certainly can't go and be too negative when you look at the advanced decline lines, and the underlying breadth, which I'm not showing today, has actually been improving, right? So you've got more stocks sitting over the 200-day moving average, for example, and that's a very positive characteristic, very unlike what was happening in 2021 if you're trying to compare. Now, as commodities have risen, which has definitely been the case, you can see in the bottom panel, commodities have risen in the last few years. Consumer discretionary stocks have underperformed. Now, this should make sense because essentially what you've got the rising cost of inputs that go into the various things that people want to buy. And essentially, again, arguably the consumer has less money to spend, which, means the discretionary stocks do not benefit. That is continuing to happen. And it has been the case over the last several years. Let's just check in on a couple of key industries here. On the left side, there's the chat ETF. So that's an AI ETF. You can see the last pullback that I just described, 29.5% from peak to trough, essentially happening in July. The semiconductors, that's SMH, pulling back 25%. And the genomic revolution, which is essentially healthcare, and it's one of the ARK funds. It's the strongest ARK fund that has been behaving the best. You can see a milder pullback at 17.5%. I put green circles on. All of these look like pullbacks in bigger picture uptrends, and we will continue to pay attention to them. Just focusing on a few stocks here out of the InSync universe, rather. And so again, these are stocks that have outperformed the S&P 500 on a 1, 2, 3, 4, 5, and 10-year time frame. You can see Nucor and steel. We did buy into the last pullback here, and again, one of the commodity stocks and certainly areas that have been benefiting. Broadcom had been consolidating and hadn't been one that's sort of necessarily the short-term leading semiconductor stock, but still represents, I think, great opportunity in this area. And again, bigger picture pullback just took place. And Eli Lilly has had a great rally after its pullback earlier in the spring that we did discuss at the time. Let's finish off a sector watch this week. You see there's the gold stocks up at the top of the list that we just talked about. You can actually see there that they are short-term up and they've still got work to do, right? So when things go through significant corrections, which they have, kind of more complex corrections, which we'll say over the course of many months, it takes time to turn these averages. But what we do know is that you cannot turn a long-term trend without seeing the short-term turn first and then the intermediate and so forth. We will continue to keep an eye, but you can see there has been a lot of turning up here in the short term of some of the areas that had turned down over the course of the last couple of months. And again, it's the defensive stuff on the bottom here, which again, I think speaks to the flavor of the market. Where am I? I'm away another few weeks here, and I'm actually going to Las Vegas next week for the APA 9-ball World Championship. My pool team made the 9-ball finals, and yeah, pretty exciting. I think there might be 1,000 teams there. I'm not 100% sure, but that'll be a hot Las Vegas next week. I'm taking the kids to Treasure Island, Florida after that. And then I am going and hiking Machu Picchu, and I will be back in early September. So I will be gone for a little bit on the webinar. But again, I appreciate your attention, and I hope you've had the best of summer. Please follow me on X. I'm at David Cox RJ. And thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.